Something big is brewing in the auto market and most people have no idea what's coming. Prices have been inflated for years, but the data shows that a correction is coming. I'm gonna show you 5 major signs that this car market is finally starting to crack and what it could mean for you. By the end of this video, you'll know whether it's smartest to buy, sell, or just wait it out. Let's start with how the car market got so out of control in the first place. Car prices really started soaring in 2020 and 2021 due to supply shortage and demand. Before the pandemic, people were actually able to pay less than MSRP, but by 2021, prices had shot up by 10 to 70% more than the sticker price. We had chip shortages and factory shutdowns that were hindering supply, but then we also had stimulus money coming in to help fund the demand. This created the perfect storm and dealers took advantage. In January of 2022, 82% of buyers paid over MSRP, and this is something that had never happened before. We're now seeing the long-term consequences showing up because of that price bubble. The first warning sign is that millions of car owners are now underwater in their loans. Basically, this means that you owe more money than your car is worth. So you could only get $15,000 for your car, but your outstanding balance might still say $18,000 or $20,000. Studies show that 1 in 4 trade-ins are $10,000 or more underwater, with the average being $6,800. For example, in 2022, Tesla Model Y buyers were paying $72,000 for the car. Today, those cars are worth $38,000. When loans go upside down by this much, something in the market has to give. The second big warning sign is the cost of financing. Financing is absolutely crushing people right now. The average car payment is $742 a month, and 1 out of every 6 people are paying over $1,000 a month just for the loan on their car. Interest rates jumped from 2 to 3% just before the pandemic to up to 6 and even 12% for new and used cars respectively today. Then insurance costs are also up more than 50% over the past 3 years. In 2021, a Honda Accord cost about $611 a month total. That same car today is costing people $731 a month, which for all the math geeks out there, that's an extra $7,200 over 5 years. Another statistic shows that almost half of applicants can't even get approved for the car loan that they want today. The total car loan debt just hit $1.7 trillion, which is the most that it's ever been. The third sign is rising inventory. More and more cars are going unsold all across the country. Now, many automakers have a 90-day supply, as opposed to in 2022, they only had about an 18-day supply. When lots get full like this, dealers will start offering more and more incentives just to get cars and inventory moved off the lot. Studies show that dealer incentives are now worth 7.7% of the total transaction price. Rising inventory and bigger incentives are clear signs that demand is fading fast. The fourth sign is actually what's happening behind the scenes at major automakers. Big companies like Ford, Stellantis, Nissan, Volkswagen are all laying off thousands of employees. Studies show that Nissan actually had 9,000 job cuts, 20% production cut, and failed merger talks with Honda. When major car makers start cutting jobs and halting production, that's a serious red flag for the entire industry. And these are the same warning signs that we saw before past auto market corrections. The fifth major sign is all the new tariffs that are on imported cars and imported car parts. In early 2025, a new 25% tariff came into effect, which impacted nearly half of all light vehicles sold in the United States. Sources say the US Trade Commission estimates that these tariffs could reduce imports by 74% and raise car prices by at least 5%. Manufacturers like Ferrari already announced 10% price hikes, and others are likely to follow. These tariffs could slow down or even reverse the price correction that's been building. So what does all this mean for you? The market is under pressure from every direction. High rates, high debt, layoffs, and weak demand. If you bought a car during the pandemic and you're underwater, don't rush to trade it in. You might just be digging a deeper hole for yourself. I suggest hold on to your car, keep making your payments and wait until prices normalize. If you're thinking of buying, patience will pay off. Prices are likely to keep falling unless the tariffs change that. The auto market doesn't reset overnight, but all 5 signs are pointing in that direction. If you found this helpful, here's what to do next. First, go watch my video on how to manage your money like the 1%. And if you're ready for a deeper look into your own personal strategy, we offer a free wealth optimization session where we can help you find missed opportunities in your plan. Thanks for watching and staying informed. Remember, the key to winning in markets like this is understanding what's really happening behind the headlines. Subscribe for more wealth strategy videos. Stay smart, stay patient, and we'll see you in the next one.